The number one mistakes most business owners do with regards to financial statements is that they don't pay enough attention to them. We see this all the time. We close the audited financial statement every year for hundreds of clients. Only a small fraction of them actually reads the financial statements or cares about them or even accepts to come into our offices and go through them and explain them to them on a line-by-line basis. This is criminal, not only because there's so much valuable information there that you can derive so many conclusions, but because the audited financial statements of your company say a story, a true story based on an expert's pair of eyes, a regulated, a heavily experienced auditor who has the knowledge, the experience, and the expertise to write your financial history in the appropriate manner so that you can draw your own conclusions. So this is criminal. Business owners only care about how many taxes they're going to pay and the cash at bank. They don't pay at all any attention to how their company is progressing, the turnover year on year, how it's been increasing, their margins, whether they are in line with industry averages, whether they are above, below. They don't even care whether the debtor cycle is, how big it is, how short it is, amongst others. So this is the most critical issue, the biggest mistake that everyone does, because you are paying us to prepare these audited financial statements. We do it with due care and diligence, and there are so many conclusions that you can derive from the financial statements year on year, especially if you've been operating for more than 5 years and you have, say, 5 or 10 sets of audited financial statements, then you can create so much policies and so many strategies based on those financial statements that is truly criminal not to take advantage of them. So what do I mean? I mean that depending on what your expenses are and what you've been investing or whether you've been investing, we can see the actual impact on the business. We can see whether the number of employees with your turnover are making sense or whether you have weak employees. All these are based on industry averages, which of course we have and we can use to tell you where you stand amongst the competition. Besides, however, the industry averages and the gross profit margins, the net profit margins, the gearing ratios, the collectible days and the aging of your debtors, each company has its own story, and this story is reflected in a year, it's reflected in comparison to its prior year, and is reflected also in comparison with the previous decade or 5 years. So it's very important, guys, for you to sit with your accountants or with your auditors better, take all the audited financial statements and tell them, guys, help me, tell me where I am, what do you think I should do in the future? What I've been doing so far, does it make sense? Is it sufficient? I'm spending so much money, say, on marketing, or my cost of sales are that, or my stock is that. I'm struggling, or I'm doing great there, but I need help there. You know, this is a two-way communication with the experts, but also with yourself, because only you know better your industry and the tricks of your industry and what's important for you going forward. But the history is something that your auditors know inside out, and I'm telling you, it's criminal not to pay attention. Only for our firm, we do this every year or every other year. We take bold decisions like creating this YouTube channel. We invest heavily time, effort, and money, and we wait to see the results. So if you take our financial statements, you're going to see that in specific years, the investment in marketing is significantly higher, and it could translate into turnover, but you need to be able to understand which year this turnover kicked in. Again, this is a two-way communication. We need your help to see whether the money you've invested in that year, when did they create results for you? Maybe it was in 2 years down the line, maybe 5, maybe on the same year. We can go through the details and find out, but obviously it's always better and more efficient, and it's going to cost you much less if we do this together. This is one example. Another example could be, for instance, an in-house personal assistant. Could that impair the profitability of the company? Could that increase your turnover? Why? Maybe because the owner of the company has so much free time now that it has converted or used most of the time to convert new business. And this new business, even though the recruit of the personal assistant was in 2021, this new business started materializing or started paying off in 2022 or 2023 or 2024. These are the histories and these are the stories that each company's financial statements tell us. And you need to pay attention to them. How much taxes you're going to pay and how much profit you made or how much cash at bank you have, it's merely a friction, or is it maybe the first two paragraphs of your company's story. You need to go deep, and you need to go deep with our assistance so that you can formulate a future strategy based on tangible results which are audited. They are not fairy tales. We sat and we verified each figure on a line-by-line basis. So don't do what most business owners do. Go in detail through your financial statements. Try to understand the history. Use us to tell you the history, to tell you what you're doing wrong. Use us to take the last 5 or 10 years audited financial statement, and let's sit together and let's go through everything together and see where our weaknesses, room for improvement, and let's formulate your strategy together. Thanks for watching and stay tuned.